China has started a modern day gold rush and they're not going to stop. They know it is real money and they are draining the West of their gold month after month. Now, right now, because of higher rates, every asset class has crashed, including gold, which is down 8% this year. And this has turned off a lot of gold investors. Trust me, I know. So, a lot of us are getting frustrated. We are asking, why is gold not a safe haven? But China is still furiously buying. They don't care that the price is collapsing. In fact, they love it. They understand the end game of currencies, especially the dollar is doomed. And we can see that in July, central banks as a whole bought around 50 tons of gold. That's gold that they lock away in their vaults as reserve. But China alone in July imported an insane 180 tons of gold from the rest of the world. Now, a lot of gold is flowing to China because the demand there is extreme. We have reached a situation where China is gobbling up the world's gold and the West is very happy to help them with it. Now, just in July, gold imports from Switzerland has reached a 5-year high. We can see that beautiful spike smashing past 80 tons. Every time the gold price gets shot down, China starts to aggressively accumulate more. Now, back in December 2016, when China bought an insane 160 tons of gold, the price was just under $1,200 an ounce. And now that gold is falling in price again, China is going to keep importing gold like never before. And the thing about Swiss gold is that it mainly comes from the West. Now, just in August, the Swiss actually imported 5.7 tons of Russian gold from London to melt down and resell it to the rest of the world. So gold is literally flowing from the West to the East, and this is why we need to pay attention to where the gold flows to. You know, there's a saying, right? He who holds the gold makes the rules. And we have China slowly accumulating big positions while the rest of the world is focused on the Ukraine war and the energy crisis. The headlines are always put in this: Biden that, Zelensky said this, Pelosi did that. But the real game changers, what China's doing right under our noses, right? They are buying up true wealth from the West and transporting it all the way to Beijing. And we can see the wholesale demand in China continue to climb year after year. And this is consumer gold demand and institutional demand. Basically, people on the street are buying up gold. And it doesn't matter if it's jewelry or gold bars and coins, we are literally witnessing a modern day gold rush in China. So why is the world delivering all their gold to China? Who would do that? Now it's very simple. The gold demand in China has created a very lucrative opportunity for traders to make money selling gold to China, right? We have gold prices in China trading at a premium versus the Western exchanges. The Shanghai gold price is $43 higher than the London gold price, so this sets up an arbitrage opportunity. We can see a big spike in the Shanghai gold premium versus the international prices, so it makes sense for traders to buy gold from Western exchanges like the LBMA or the COMEX and deliver them to China and make a nice chunk of change. Now, I need to quickly mention that commodity traders just want to make money, right? They don't really care who gets the gold. As long as there's a profit to be made, they will exploit every opportunity out there. It's the name of the game. So this setup is very interesting because basically, Chinese government policy restricts the quantity of gold that can be imported to China. They are controlling the supply while demand is surging. And that is why there is an incredible spike in gold premiums in the country. And here's the funny thing, we know China is the world's biggest gold producer. So what is going on? It's very simple, right? China is keeping all of their gold production for themselves and using this price arbitrage to get traders around the world to drain the West of its gold and transport it to China. And whether this is intentional or not, we will never know. But if it is, they are going to do it gradually, keeping the premiums high enough for traders to make money without overpaying too much. In fact, if we compare the gold price difference between China and India, we can see that China is selling at a $30 premium while India is selling at a $10 discount. And that means if you're a trader, you would rather transport gold to China than India. Why would I sell gold to India at a discount when I can make more money selling to China? And that's why all the world's gold is flowing towards Shanghai. This is how powerful a price arbitrage is. You can literally drain any commodity and stockpile it if the premium is high enough. So why is the demand for gold so high in China, right? Why are all the local Chinese people, they're all hoarding gold? Now the answer is quite simple. Because it is an effective store of value and investors in China, they have very few options. Now, firstly, the Chinese yuan is in a terrible free fall. It has crashed over 12% versus the dollar, and that is not good if you're a local person in China. Now, we all know that China tries their best to keep their currency weak so that they can export more stuff to the world because they are the world's factory after all. But there comes a point where it can fall too much and cause local inflation to just soar, right? The yuan is now at a 14-year low, and it has come to the point that China's central bank is forced to deploy its reserves to prop it up and making it harder to bet against the yuan. But it's only a delay tactic. Inflation in China is still going to rise like the rest of the world. As power keeps hiking rates, every country is in trouble. Yes, China's inflation is only at around 2.7%, much lower than the United States, but they are still a net importer of commodities. So if you're local in China, stuff is still going to get more expensive, especially once those lockdown ends. Normally, Chinese people would run towards real estate, right? But we all know what's happening in China's property market. The bubble is deflating. Home prices in China are starting to go down. We can see the average prices of new homes crashing down to earth. Home prices have been falling for 12 months straight, and it's not going to stop anytime soon. And this is definitely not a good time to be in real estate if you're living in China. Now, how about Chinese stocks? It's also a bloodbath out there, guys. Now, unlike the West, China is not hiking rates, but they are still affected by a slowdown in America and Europe. Their biggest customer, the United States, is in a technical recession, and Europe has an energy crisis. Now, China's own domestic demand is also destroyed by all of their lockdowns, and that's why the Chinese stock market, the Shanghai index, has crashed over 15% this year. So in China, there's nowhere else to hide except for gold. Now we know that gold is down 10% this year, 8 to 10%, but that is in dollar terms. But when we price it in the Chinese yuan, gold is actually up 4% year to date. And we can see that even after the crazy roller coaster price action of gold, it is still up. Gold has actually appreciated in China's local currency and is perhaps the only asset that is up compared to real estate and stocks. And that's why the demand for gold in China is so high. Local Chinese people, they understand that gold has been a true store of wealth for thousands of years, and this crisis is just another reminder that gold is real money. But so far, what we have seen is just the commercial demand for gold. It is gold being imported to the Shanghai Gold Exchange and then sold to businesses and investors. The real secret is China's central bank's gold accumulation. Now, officially, China has slightly less than 2,000 tons, but we know it's definitely a lot more than that. However, China doesn't like to buy from the Shanghai Gold Exchange. The World Gold Council stated this in a report. There are reasons why they may prefer to buy gold on international markets. Gold sold on the Shanghai Gold Exchange is priced in yuan, and prospective buyers, for example, the People's Bank of China with large multi-currency reserves, may rather use US dollars than purchasing domestically priced gold. Now, China's central bank doesn't want to buy gold on the exchange. They don't want to jack up the local price there. They rather use their stash of over $1 trillion US dollars, maybe just slightly under $1 trillion, and buy it from the West, right? And this makes total sense. China has been de-dollarizing for a long time. It is not a secret. They are trying to influence the world to do more bilateral trade in their own national currencies and not the US dollar. China has seen what's happening with Russia's dollar assets and they are sweating bullets. And that's why China is getting rid of their US treasuries, turning around and using that cash to buy gold. Now we gotta understand that when China's central bank buys gold, it is off the books, right? It can't be tracked, and they prefer it to be that way. They don't want the United States or the West to discover how much gold they really have, because it might reveal their true intentions. Now back in 2010, when the IMF sold around 400 tons of gold, many countries bought, but apparently China wasn't listed as a buyer. And according to an official from the China Gold Association, he said, it is not feasible for China to buy IMF bullion, as any purchase or even intent to do so would trigger market speculation and volatility. And this tells us that China understands that their gold buying habits can move markets. So it's much better if they stay silent and buy gold at a cheaper price than go around telling the whole world. But make no mistake, China has big plans for buying gold. In an interview, the China Gold Association president laid out China's ambition when it comes to gold, and the article is titled Gold's Strategic Mission to Support the Chinese Yuan to the World. Now, we gotta pay attention to this. He said, in order for China to undertake its strategic mission, we must increase our gold reserves in a planned way. The first step is to surpass Germany with 4,000 tons, and the second step is to gradually increase our holdings to 8,500 tons, surpassing the United States. So it's clear as day, guys, China wants to surpass the West as the biggest holder of physical gold. And here's the thing, all those sanctions on Russia banning their gold from the LBMA is only helping China at the end of the day. And we know that China is already buying cargoes of cheap LNG and oil from Russia and then reselling it back to Europe for all those huge profits. But that's not all. They are also buying an incredible amount of gold from Russia. And just in July alone, China increased their gold imports from Russia by a crazy 750%. They bought over $100 million worth of Russian gold, and it's very likely there was a discount as well. So all the Western sanctions are helping China earn money from cheap energy and allowing them to stack discounted gold from Russia. It's really crazy. And this means sooner or later, China will reach its goal of having the world's largest gold reserves, right? And as the price of gold continues to drop, China will continue to buy gold from the world and increase their stockpiles. You know, all those sanctions hitting Russia, and the longer this war drags on, China will keep absorbing Russian gold month after month. And even if they are already not above the United States in gold reserves, they will reach that threshold. It's just a matter of time. And this brings us to the big question, what will happen next? We know China is trying to push out the yuan as a global currency. Putin is now selling his gas to China and they are paying it partially using the yuan. Now, in fact, because of the dollar strengthening, many economies are getting wrecked. There's now a global currency crisis going on, and we have countries like Bangladesh and Myanmar looking to find an alternative currency, and they're starting to choose the yuan. So if China decides to back their currency with gold, it could be a game changer. It might be a tipping point to get other countries to de-dollarize. And here's the thing, by itself, the yuan is still decades away from being a real challenge to the dollar. And we have SWIFT, the global payments platform, actually monitoring the progress of the Chinese yuan. They are tracking how close the yuan is to catching up with the dollar as an international currency. And we can see that it only ranks at number 4, making up just 3.2% of total transactions on SWIFT, while the dollar stands at 40%. It is increasing over the years, but it's very slow. There's still a gigantic gap. Now, I believe China has a big plan for all their gold reserves and really something we need to keep an eye on. They are just waiting for the right time to declare their gold holdings and shock the world. But in the meantime, they're going to keep draining gold from the West. Gold is going to keep flowing away from London, New York, and Switzerland towards China. And as the price of gold keeps dropping, China will keep buying gold at a discount. Price drops another $50, buy more. Drops down to $1,500, buy even more. They are not going to stop. So let me know what you think. What is China planning with their gold reserves? Do they actually have more gold than the United States? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.